Hey guys, Billy here from Storm Trades. Another trade recap from Friday, May 2nd. This was an oil trade. I'm just going to bring you through my simple process. Again, establishing a daily bias, how I read the high time frame market structure, and ultimately how I found my trade execution for this AM session. Now today we had NFP at 8:30. So obviously any trading was going to be done after that. I was hoping to see a manipulation and then a move lower. The reason, as you can see on the screen here, is we were delivering out of a daily fair value gap, a bullish or bearish fair value gap. Okay, and we had this really nice previous daily low all the way down here. If I take a fib from this wick here, halfway through, that's another potential target. Okay, but this is it. This is a very basic way of doing daily bias. We deliver our price moves from internal to external and from external to internal liquidity. We've already swept the previous daily high. Something that I also noted pre-market was that we had an SMT, which I'll show you when we drop down to the hourly, but we had an SMT here. Okay, with RB. So I was bearish and looking for bearish setups today. Could I have been bullish? Not really where we are at this moment. I wanted to see a manipulation higher, perhaps take another high, and then a move lower. Okay. So that's it. It's a way to establish that daily bias. Pretty clear here. And here's the hourly. Okay, here's how the hourly looks. Okay. And like I said, there was a SMT with RB right here. So all of these things they're just adding confluences together, which just doesn't mean the trade idea once it happens is going to work. It just means we have higher probability of it working out. It's like doubling down on an 11 against a dealer 6 in blackjack. You're gonna lose that a bunch of times, but over the long run, you're gonna have a positive expectancy from that trade. All right, so a couple things that I'll mark up. I'm looking for changes in the state of delivery, okay, which we get right here. And I'm also looking for imbalances or some internal range liquidity, which we've already traded into here, okay. And at news, I am looking for, this is my plan, is to see some sort of a manipulation up and then a distribution down. Okay. So let's go to the next hourly candle. This is our manipulation right here. Okay. We actually closed above this bearish hourly fair value gap. However, it was due to NFP, which it doesn't necessarily mean that I'm automatically going to be bullish here just because we close above it. Everything is taken into consideration. Okay, so here's the previous daily high. We're delivering out of the daily bearish fair value gap, and we just manipulated up into this internal range liquidity. So at this point, I am now going to drop down to my time frame, my execution time frame, M5. This looks like it could be a liquidity sweep here on the hourly, so I'm going to mark that out. Because if it is, it would mean that we've formed a swing point here and we can only reverse after we form a swing point. So clean this up a little bit. And now we're watching price. Okay, it's 8:55. We're watching price. All right, now we've gone a little bit higher here. I have potentially a liquidity sweep here. This is what I'm looking for. And I would want to see, this is, as I'm watching price, I'm making notes like this. And I would want to see some sort of a distribution or a displacement down through this breaker. And from there, I got some minor sell side liquidity right here. Okay. We're watching price, displacement, close below the breaker. Okay, this is actually now a unicorn because we have this fair value gap inside of the breaker. Right, this is where I sold. Stop loss on top of the swing high. Take profit 2 times 2R. And we would see, I usually would go break even here at the minor sell side liquidity. Let's see how this works. And price comes up into the fair value gap and then distributes down for the 2R win. That was it for today. It was a great trade. It moved quick, followed our logic. We were trading in the direction of our high time frame bias along with the hourly market structure. All right, you guys have a great weekend, and I'll see you next week.